Welcome. In this video, will XCN coin go higher from here? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When the chart is carefully examined, it becomes evident that the price had previously made several upward attempts, but encountered strong resistance at the same level each time, failing to break through and pulling back instead. In technical analysis, such levels are often referred to as a horizontal resistance zone or a key resistance level. This is because, historically, when the price reached this level, significant selling pressure emerged, indicating that market participants viewed it as an important point for taking profits or opening short positions. However, the recent price action reveals that this structure has been broken, and this time when the price reached the same level, it did not stop, but rather broke through to the upside. Such breakouts should be evaluated not only from a chart-based perspective, but also as a psychological threshold. When the price surpasses a level it has repeatedly been rejected from, it sends a signal to investors that the market direction may now be changing. This is one of the most important psychological catalysts that sets the stage for upward price movement. Looking at the price behavior after surpassing this level, we observe a more measured and cautious upward movement instead of an aggressive rally. This is often a breather or retest phase that occurs after a breakout. Investors want to confirm whether the level has truly been broken and adjust their positions accordingly. Some traders do not enter positions without such confirmation, while others buy during the breakout but sell early for short-term gains. Therefore, the initial rise after a breakout is typically limited. The real move often begins once the level is confirmed as a new support. At this stage, volume data plays a critical role. A spike in volume during the breakout of a resistance level confirms the strength and legitimacy of the move. If the price breaks a key resistance with high trading volume, it indicates strong buying demand and suggests that the breakout is real rather than false. The chart currently reflects this pattern. The resistance level has been breached, the price has gained upward momentum, and trading volume has exceeded past averages during this process. This confirms the strength of the breakout. Additionally, the fact that the price continues to move upward without falling back to the same level shows that the market now considers this level as support. This confirms the classic technical analysis principle known as the support-resistance flip. If, after a resistance is broken, the level is not retested but a new upward structure is formed, this indicates a positive outlook. Investors now see the zone as a safe area and may rush to buy before the price gets close to it again. The small upward move following the breakout signals investor caution. Breakouts do not always result in aggressive rallies. After some breakouts, the price may consolidate or pull back for a retest. However, the fact that the price hasn't quickly dropped after the breakout in this case shows that the upward move is gaining traction. If the bullish candles have large bodies, it indicates strong buying pressure. If they are small-bodied with long wicks, it suggests the market is still indecisive. Another important assessment is the trend structure. If the broken resistance is also significant on higher time frames, then the breakout can have much larger implications. Breaking long-term resistance levels generates buy signals not only for short-term traders, but also for medium and long-term investors. This increases demand and paves the way for the price to move higher. In conclusion, the price breaking through a strong resistance level that had repeatedly pushed it back in the past and beginning an upward move afterwards is a highly positive development from a technical analysis perspective. This suggests that buying pressure in the market is strengthening, sellers are retreating, and investors now view the level as support. As a result, the measured upward move following the breakout could be the beginning of a larger bullish wave, as long as this level holds and market confidence continues. If indicators and volume support this, the price reaching new highs becomes highly likely. But of course, we cannot rely on resistance alone for our analysis. Let's now take a look at other metrics. Stay tuned. When the chart is carefully examined, it becomes clearly visible that an inverse head and shoulders pattern, a highly characteristic formation and widely recognized as a strong reversal pattern in technical analysis, is currently forming. This pattern typically appears during the bottoming process of assets that have been in a prolonged downtrend and is considered one of the strongest technical signals indicating a potential trend reversal. In the current situation, the price movements are closely resembling the structure of this pattern. Upon initial observation, the left shoulder of the pattern stands out. The price finds support at a certain level and experiences a short-term upward bounce, only to face a sharper decline and form a new low. This classic price behavior marks the beginning of an inverse head and shoulders formation. The second, deeper low is technically referred to as the head of the formation. This bottom typically forms at a point of peak pessimism and maximum selling pressure in the market. However, the subsequent recovery and upward reaction indicate that the market is beginning to regain strength. Following this upward move, a pullback occurs near the previous shoulder level, and this time the price finds support at a higher level than the head, forming the right shoulder of the pattern. This structure in technical analysis signifies a shift in investor psychology and suggests that sellers are no longer fully in control of the market. If the depth of the right shoulder is similar to or slightly shallower than the left shoulder, it is considered a sign of a healthy pattern. This exact scenario is currently unfolding on the chart. After struggling to find support during the downtrend, the left shoulder formed first, followed by a deep pullback forming the head, and now the price is in the process of forming the right shoulder. The right shoulder typically represents a phase where investors are uncertain but are slowly regaining confidence in the market. During this period, trading volume begins to rise and upward pressure starts to build. The price finds support several times in the right shoulder area and begins to show signs of upward movement. The critical stage for the completion of the pattern is the breakout above the so-called neckline. This line is drawn between the peak of the left shoulder and the peak formed after the head. If the price successfully breaks above this neckline after forming the right shoulder, the pattern is considered complete from a technical standpoint, signaling the start of a new uptrend. This breakout usually occurs with high volume and triggers significant buying pressure as many technical traders open long positions upon confirmation of the pattern. The target following an inverse head and shoulders breakout is typically calculated by projecting the distance between the head and the neckline upward from the breakout point. This distance is known as the measured move or pattern target in technical analysis. For example, if the head is 100 units below the neckline, the target after the breakout is estimated by adding 100 units above the neckline. Thus, the pattern provides guidance not only in terms of direction, but also in terms of potential price targets. In the currently analyzed chart, it appears that all components of the structure have largely formed and the price is sitting at the lower boundary of the right shoulder. If buyers step in at this level and the price begins to move toward the neckline, the final step needed for pattern completion will be in progress. Once the neckline is broken, technical traders interpret this as a buy signal and open long positions. This can lead to increased trading volume and accelerate the price movement. After the breakout, prices typically consolidate briefly before gaining momentum toward the pattern target. The inverse head and shoulders pattern also represents a shift in market psychology. In the left shoulder, sellers remain dominant. At the head, pessimism peaks, and in the right shoulder, buyers begin to gain control. When the neckline is broken, this psychological transformation is complete, and the market starts favoring the buy side. This transition process can take several days or even weeks. Therefore, investors should be patient and wait for the pattern to fully confirm. In conclusion, the current technical setup indicates that the asset may be preparing to end its long-standing downtrend and transition into a new uptrend. Patterns like the inverse head and shoulders are among the most reliable reversal formations in technical analysis, and when properly formed, have a high success rate. As the right shoulder nears completion, it is crucial for investors to pay close attention, confirm the neckline breakout, and monitor the accompanying volume. If the price manages to break above this critical level, it could mark the beginning of a strong and sustained upward trend with a potential upside equal to the distance between the head and the neckline. One of the most important technical analysis tools used to better understand the direction of price movements is the MACD indicator, which is currently in a noteworthy position on the chart. This indicator is highly valuable for identifying the direction and strength of market momentum, and many professional investors base their entry and exit decisions on the signals it provides. The main purpose of the MACD is to track the difference between short-term and long-term price averages, revealing the strength and potential direction of the trend. In the current situation, although the slope of the MACD lines has started to turn upward, for this upward momentum to evolve into a sustainable bullish wave, there needs to be a clear and consistent rise in the indicator's lines. Specifically, when the MACD line crosses above the other line, called the signal line, and shows a noticeable upward divergence afterward, it is considered a positive technical sign. This kind of setup indicates that buyers are gaining strength in the market and that prices may begin to accelerate upward. However, this is only the beginning. For a true uptrend to begin, the MACD lines must continue their upward movement after the crossover, meaning the rise must persist. It's not just the crossover that matters, but also the slope and continuation of this movement, which help us assess whether the uptrend is healthy. If the lines continue rising at an upward angle and start to diverge from each other, this indicates growing buying pressure and a stronger desire for prices to move higher. Such a rise in the MACD lines forms the basis of a potential uptrend on the price chart, because the main driver of price direction is the supply-demand balance, and the MACD indicator effectively shows which way that balance is shifting. As the lines move upward, investors interpret this as buying pressure is increasing and begin entering the market. This initiates a chain reaction that supports upward price movement. Therefore, not only the crossover, but also the upward slope of the lines and continued growth of the histogram bars in the positive area provide strong technical signals that the bullish move may continue in a healthy way. It is also very important for the MACD to be positioned above the zero line. This indicates that the short-term moving average is above the long-term average and that the overall trend is upward. If the MACD lines are below the zero line, even an upward crossover may be limited to a corrective move. However, crossovers that occur above the zero line indicate a strengthening trend with a higher probability of continuation. In the chart currently being analyzed, the MACD lines are near the zero line and beginning to curl upward. This setup can be seen as a preparation phase before a breakout and suggests that buyers are gradually starting to enter the market. When evaluating MACD signals, it's also important to pay close attention to the histogram bars. The histogram visually represents the difference between the MACD line and the signal line, and the size and direction of this difference indicate the strength of momentum. If the histogram bars are beginning to enter the positive area and are growing, it signals that buyers are starting to gain dominance in the market and that the upward movement may be gaining momentum. Likewise, when the histogram moves from negative to positive, it often acts as a leading signal that the price is at or near a bottom and a new upward wave may be beginning. The timing of the MACD signal is also quite important. In other words, the line should not only move upward, but do so at the right time. Signals generated by the MACD during periods of low volume or indecision in the market may have limited impact. However, upward movement in the MACD lines that occurs alongside strong volume increases signals to investors that a powerful buying wave may be beginning in the market. These types of moves often mark the beginning of longer-term trends. A similar setup is present in the current chart. The MACD lines have slowly started to move upward. This movement may indicate that buyers are entering the market and that selling pressure is easing. If these lines begin to move upward at a steeper angle and the histogram bars grow in support of this trend, we may be in the early stages of a significant price increase. At this point, the most important thing to watch is whether the lines can sustain their upward movement. A single upward curl is not enough. The lines must continue this motion and the market must confirm it. The MACD lines must rise.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.